Alright, YouTube, Stocks by the Numbers, welcome back. I know I'm coming to you late here on Friday. We had an early day, early afternoon close here after the holiday. Happy Thanksgiving to everyone. I know I'm delayed, but hope you all had a good time. Hope everyone's family's doing well. And the company I wanted to look at here today, just do a quick update, is ORGN Materials, ticker symbol ORGN, listed here on the NASDAQ. Now, the first time we looked at this stock was back here, September 21st. And I mentioned that after this big drop, supposedly they were shifting into biofuels. The ORGN 2 project was delayed now by like an extra year or two, and also going to cost like $400 million more. That obviously threw investors for a loop. Everyone kind of jumped ship. And then I mentioned that we did potentially have like this bear flag forming, but I also just kind of pointed out, and we went like metric by metric, and we went through a few news articles, and I was just listing that, in my opinion, just generally speaking, that we had more negatives outweighing the positives. And now you're going to have, again, because of this big drop, you're now going to kind of maintain that bearish psychological effect. And that's why I said that chances are, in my opinion, we could drop to the low ones. And this line again, this line again is our long-term support trend line. And I mentioned that we could potentially pull back to that trend line, the low ones, and, that would be your key level to watch. And I also said that we could potentially have a flash crash through that level at some point. And that's kind of what we're seeing here. So we can see that we came down to the level and then basically completely dropped through to new lows of 86 cents. Then we kind of initially popped and rebounded back up to above $1.25. And then you can see for about 2 weeks here, we were bouncing and trying to hold the line. Then we got below it and tried to regain it multiple days in a row. Then we had a nice pop back up to the fib. Didn't quite get back to the 20-day moving average. And then you can see that we dropped down and flash dropped through the support channel again. And we're looking at a low of 72 cents before bouncing up again and obviously dropping back down below that trend line. So now, in my opinion, one of two immediate things can happen. Obviously, the stock could either go higher or lower. Thank you. Have a good day. But more realistically, what we can see is either, again, this is your key level to watch. So right here, you could see a potential regain of the level and then a run back up here, maybe to around like 110 to this trend line here, kind of lining up with these tops. And of course, that would also actually meet up with the 20-day moving average. So this could happen over the next couple of days where the moving average is probably going to dip below this trend line, and then that'll be the key point to watch. If it does rally up and get back to the moving average or near that trend line, then we have to see, does it break out, and do we gain some bullish momentum, or are we going to see another rejection and try to drop back down and retest our our all-time support trend line? But also, on the flip side, we could just continue selling off lower. And as we see, we are kind of like stepping downward here, maintaining this downward channel. So it's of course, it's hard to call. But in my opinion, again, just based on recent events, and now you can see that they're also looking to cut some of the fat, trim about 30% of the workforce, and apparently shelf and kind of delay a lot of the other projects that they were putting some capital into, supposedly stating that, it's going to be more longer term plays. So I guess they're shelving it for now to try to limit the bleeding. But apparently trimming this workforce, they're looking to save about 2.7 million, I believe the article says. So I can appreciate the fact that they're fighting to go EBITDA positive. I believe they said by 2024, somewhere in there. But since we made the video, we had an earnings report. Excuse me. And we can see that coming off the previous earnings of a pretty nice beat, revenue of almost 6.9 million, we can see that the company posted a little over 7.1 million. Estimates, though, were, again, 14.88 million. And I said that in these situations, again, revenue is key, in my opinion anyway. I know some people like to look at the profitability and they'll say that a company, has turned around and they're not bleeding as much as they used to. So, they start to buy into the stock and give it some momentum. But again, even that short-term momentum is going to be very short-lived if the next quarter the company misses by revenue by a chunk again, So, like for traders, I guess I can understand the fact that, you're looking at that as a positive, so you're trying to make a quick gain. But obviously, as an investor, that's not what you want to see for the longer term. And switching over here now, this again, I have to say, is going to be a key quarter because now with all the delays that they had, pushing the timelines back, now we're moving into an even higher estimate, as we can see, north of 15.5 million. So now, like, one of two things are going to happen. Either A, the company's going to post like high 14s, maybe low 15s, whoops, and come in with a light miss on this number, right? And then we can say, okay, the company is kind of back on track, and now they're posting like the previous quarter's estimates for this quarter's estimates. So, eventually down the road, hopefully within maybe the next quarter or two, they can increase, productivity and get back in line with estimates, and then we can continue to grow up and climb back up from here. So again, like I always say, in my opinion, you are better off waiting and reacting to proven stability as opposed to trying to predict, the bottom or the potential U-turn. So that's why, in my opinion, I was again, I was looking for some of these numbers to come out as a beat. Again, nice beat on the EPS side, but again, it was just that slew of negativity that hit the stock, and now I just feel like some of the hype, some of the urgency has now kind of dwindled away from the situation. And now, any traders or any long-term investors that were hype on the stock, up at like $3-4, again, I think that when this news came out and just over the last couple of months, I do feel that a lot of people have jumped ship. And again, I am not bashing the company, and it sounds like a couple of years' time, they are going to completely turn it around, and they're forecasting, revenue to come in for the year of well over 100 million. And I mentioned a lot of other green flags last time as well. I mentioned assets are outweighing liabilities, and liabilities seem to be kind of consistently decreasing. And we spoke about the positive equity in the company, and we spoke about the book value as well. And now we're obviously trading at an even more attractive price to book ratio because the stock was like 135 when we did the video, and now it's 90 cents. But of course now, also with the stock now playing with this dollar sub $1 level, now because the company is listed on the NASDAQ, we have to potentially wait and see if they get that NASDAQ compliance letter, which may possibly happen. And that's why I'm saying if we just got back below and rejected this trend line here, we may potentially continue downward, and the street may even bring it down to this fib here of 68 cents. And then, of course, even though we know that a potential NASDAQ compliance letter could be incoming, no one is probably taking it into account yet until it happens. And then when it happens, as we see, any of these stocks we followed, when they, obviously received that letter, that's when you see the stock chunk down even more. So that unfortunately, even after selling off from 135 down to 90 cents, I do still feel that we could take another leg lower as well. Now, again, I am just predicting, in my opinion, that based on the chart, what I'm looking at here, lower highs and lower lows, that we should technically hit a new low below this low of 72 cents. That's why I'm looking at the 68 cent fib level. However, I mean, anything can happen, right? Over the next couple of days, I mean, yeah, it could drop back down to this 72 cent level, which of course for a lot of you would suck and you might get pissed off. But again, remember, it could form some sort of double bottom right there at 72 cents and then potentially pop right back up and reclaim this trend line. So that's why, even if it does drop down to like 60 something cents, I have a feeling it's going to retrace and get back to that trend line. Because again, we do have some negatives on the back burner that, in my opinion, are outweighing the positives. But now they're saying that Where was it? Here we go. Origin material share rise 18% after beginning production at Ontario plant. So that's what I mean. Now we're up and running, right? This is the point I'm trying to make. Now we're up and running, and even though we're behind schedule, yeah, now estimates are even higher, but, these were supposedly the estimates for last quarter of, high 14 million. So that's why I'm saying now with production taking place at the Ontario plant and supposedly trimming the workforce and trimming some of the fat to try to the increase the profitability to still be at losses, but to narrow those losses. Now we have to wait and see what these numbers are going to be. And of course, again, from a technical standpoint, your key level again is this all-time support trend line. So hopefully it does stay above that trend line, but chances are, again, even if we meet up, what is this date? End of February 22nd. So that's what I mean. Even like here, maybe like mid-February, 12, 13, 14, we could be like at the trend line, which as we see would be about 81 cents, perhaps 80, 82 cents, somewhere in that range. And then we could have the bounce off the support line and have the rally going into these earnings on anticipation of a good beat. But unfortunately, only time will tell. So we have to wait and see what numbers they come out with. And, I know a lot of you are hype on the stock. And obviously, because it's been down, you probably have a much higher cost basis. So I am really pulling for all of you. But again, it's going to come down to these numbers in the immediate short term over the next couple of months is what I'm talking about. Not necessarily the next couple of years, but just over the next couple of months, the short-term reaction in the stock is going to be based off of this trend line, any potential new headlines that come out, and also these revenue numbers here. I have a feeling that the EPS loss is probably going to be in line or potentially beat and come in more narrow than Wall Street expected. So that's why I think like the bleeding is kind of getting under control. Now we need the revenue to start coming in. And again, if they post like 14 and a half, 14.9 million, again, that would have been in line with the previous quarter estimates. So now we can say, all right, now they're starting to, pump out some revenue and, they may be just a couple of quarters behind schedule. But on the flip side, we can see we went from almost 6.9 million and then we slightly got higher to 7.1 million. So now if the company comes in very light and posts like 8 million, I have a feeling that Wall Street may take it to the shed. And we may start seeing an even bigger drop there. But again, when we spoke about some of the financials, we have a market cap right now only 130 million. Right? Very low PE. You can see the curl there in the EPS and the losses. And again, revenue starting to come in, but we need it to really chunk up. Now we need to see 14, 15 million. And that's why, again, even compared to this last quarter, 14.88 million, if this quarter the company posts like 14.5 million, right? And technically they would have missed this quarter, but at least they're kind of close. Right? You understand what I'm saying? So that's why even if they're like kind of close, it may not get destroyed and it could even potentially regain $1 plus because, now people may feel, okay, this is the bottom, revenue is starting to grow. So now over the next couple of quarters, revenue is going to come in and we're going to get back to, 1.5, 220. And of course, over time, potentially fill this gap back up to about 360. But again, if they come in very light and they post like 7-8 million or something like that, I think it's going to get worse before it gets better. But these financials, again, very quickly. Yeah, the debt was staying in line. What were we looking at? It was the book value per share, and of course, look at the liabilities just drastically chunking down. While the assets, of course, even though they have gone down, they have not decreased at the same rate that the liabilities have. So now, Look at that. Yeah, it's almost about a 10-to-1 ratio. Now you have assets outweighing liabilities. And look at the equity again, as I mentioned, the equity consistently climbing. Positive equity yields positive book value per share. The higher, the better. And as you see, as the equity consistently increased quarter over quarter, we were looking at the increases in book value as well, up to almost $3. So that's why, again, we can't completely dismiss the situation, because we definitely do have some positives and some green flags. But again, I just mentioned that those big headlines, that big shift into the biofuel sector, mixed with, oh yeah, by the way, that project's delayed now even longer, and it's going to cost like an extra $500 million. Again, that is just huge negativity. That's what chunked the stock down to begin with. And I just spoke about just the immediate short-term psychological negative effect that, I felt was kind of like lingering and hanging over the stock. And as we see, that was the right call, and we began to chunk down and hit new lows. So again, that's why this situation, I know everyone wants to get into these stocks at like 78 cents and then turn around, then it's like $5 and boom, you made an amazing call, and wow, you're up, 500-600%. I understand. And I hope all of you find all of them. But again, just in my opinion, just bringing you just a little advice to the table. You don't have to listen to me. But, in my opinion here, I would wait. I really would wait. Because first of all, I can probably get it for cheaper, right? Even if it comes down, again, to retest the low of 72 cents to form a double bottom and pop back to the trend line, chances are it'll continue downward, it looks like. So you probably could even get a better entry than 90 cents here. And then, if you want to catch it down here at 70 cents and then, ride the bottom bounce and then the hype wave going into these earnings, like I said, if they don't come in with a complete miss, you could actually see the stock potentially start to rise back up. Because again, book value is like 294. We're at 90 cents, right? So that's why we could potentially see some momentum back up to $1 and $1 plus even, going into and even after this report comes out in February. But again, as you see on your calendar, we're at the end of October. So that's why I'm saying, in my opinion, I think we could still remain a little bit patient. And if we do call this right and it sells off and it hits like that 68 cent fib level, then of course we can try to see, try to come back and see if it's worth potentially getting involved there near the bottoms to try to ride into it. But again, that would be taking on more risk because you haven't jumped in on proven fundamentals yet. But let's switch over here to stock charts very quickly, and then I'll let you guys go. And as we see, this was the tightening. Yeah, it was right here, like September 21st. I mentioned the big drops, the Bollinger Bands kind of trumping out and balloon top and bottom. And now as you see, as it flattened out, you can see the Bollinger Bands tightened up. And we mentioned here September 21st, I kind of predicted, just in my opinion, that the stock would, break that bottom band and continue to chunk downward. And you can see that for quite some time, the stock was well below the mid Bollinger Band, trying to retest about 3 different occasions and not succeeding. And then you can see we jump and we spike basically back up above the top Bollinger Band to that 50-day moving average, and then try to bounce off the mid Bollinger Band as well. Then we have our flash crash, and you can see another retest, and then you can see the rejection back down here. So that's why I feel, in my opinion, again, we may potentially take another leg higher, and also we can do this as well, which of course would be a descending triangle, right, with this coming in here. So that's what I mean. We can jump in and then like right near Christmas or right near New Year's, all of a sudden that's when we hit the apex of the descending triangle, and then we chunk even lower back down into the 70s and potentially the 60s. So that's why I'm saying, in my opinion, I would personally be patient. And again, you can see the black MACD here up at the top, and then we recently crossed to the downside. And it looks like it may have flattened out and it might try to go higher, but I have a feeling it's going to continue lower. RSI sub 40. Again, we spoke last time here about, and I showed you guys that, for about a month, the RSI on the daily was sub 30. So unfortunately, we couldn't really use that as a good indicator. And you can see that we dropped down, looks like 15, 20 before having a little bit of life come back into the stock. So unfortunately, something like an RSI, just looking at a situation like this, saying, oh, it's oversold, doesn't necessarily mean you are timing the bottom. On the weekly, though, we could see this big U-turn that took place, and now we can see that we've slowly started rising and actually crossed to the upside. So that's why I'm saying, like, it could go lower, but potentially not that much lower. But again, the technicals, lower lows, lower highs. Again, you know, now we have this resistance trend line and we're below this support trend line, and we have a potential descending triangle lining up. So that's why I'm saying I would remain patient with it, in my opinion. It just seems too unpredictable in my eyes. And here again, the RSI sitting at about 29 and a third, but you can see for several months was sub 30, so can't really be one of our leading indicators either. That's why I'm saying, in my opinion right now, this situation, I really think it's going to come down to this revenue number. Because again, I have a feeling that the EPS may, even if it slightly misses or it slightly beats because they trim some fat, fantastic. But I really think it's going to come down to this revenue number. And that's why, again, I think that it definitely could, even if it drops, it definitely could regain the support line and even rally close to $1, dollar plus, with these earnings. But if this revenue comes in, 50% below this estimate, this stock is going to drop down into the 60s potentially, in my opinion, and hit new all-time lows, even lower that we've seen. But that's pretty much it. I don't want to beat a dead horse, and I'll end it there. But again, if there's anything you read that I may have missed, if you're seeing something here in the technicals that I'm technically not seeing, of course, please let us know down in the comment section. That's what the comment section is for. And, I'll definitely give you your credit and, let you know that we appreciate the input. But, yeah, like the video, thumbs up, algorithm helps me get more eyes on the channel. And, of course, subscribe to the channel as our handshake agreement. I have no problem going back and reviewing situations that we spoke about in the past. Or, like I said, when I come out and do videos on just these random discounted stocks that I feel, in my opinion, right? Like a Campbell's soup. I know, see, like not much has happened, right? And of course, stocks could go down, they could go up, but I just don't want to look at these situations and then turn out to be correct and just kind of find out that nobody was involved, right? So hopefully, again, I'm trying to stay more correct than incorrect here. So hopefully, even if you're not specifically following a lot of these personal calls, then I at least hope that you're kind of understanding my point of view and the way that I do it when I look at a lot of these situations. Because again, I know that we're traders market and everyone likes to look at technicals, and a lot of people don't look at fundamentals, and people, I do like the mental checklist when I go through these stocks with you guys and make these videos. And, if we spot like 7 or 8 things that are bad and we have like 1 or 2 things that are good, that's when I'll say like, oh, in my opinion, I think the negatives are outweighing the positives. So I think we go down before we go up. Like, yeah, you know what I mean? It's all those little tidbits of information. That's what I really hope you're retaining more than just pulling up a video and saying, oh, he's talking about ABC and he thinks it's going up or he thinks it's going down. Like, again, that's why I always say, like, you should look at the why. You should always look at the why. Why is this person saying this? Why did this stock go up? Is it justified? Is there a why? But anyway. Happy Thanksgiving again. I know I'm late. I hope everyone's doing well. Thank you for stopping by. I want everyone to have a good weekend, and I hope everyone's doing well. And I'll catch you guys in the next one.